Investing in Japan? This hack could save you big. Have you ever wanted to invest in Japan's booming market, but worried about the wild swings of the yen? Well, there might be a solution hiding in plain sight: the mysterious DXJ ETF. Is it a magic key to currency hedged gains? Or a secret weapon for risk-averse investors? We're about to crack the code on the DXJ, so buckle up and get ready to learn. Stay tuned for Chat ETF's DXJ Deep Dive. Question 1. What is DXJ ETF? The DXJ ETF, also known as the Wisdom Tree Japan Hedged Equity Fund, offers investors a specific way to participate in the Japanese stock market. Here's a breakdown of its key features. Focus on Japanese stocks. DXJ primarily invests in a basket of Japanese companies. This provides exposure to the overall performance of the Japanese stock market. Hedging out currency fluctuations. A key characteristic of DXJ is its currency hedge. The fund uses strategies to mitigate the impact of fluctuations between the Japanese yen, JPY, and the US dollar, USD. This means that the value of your investment won't be significantly affected by changes in the exchange rate. Oh, how it works! The fund employs financial instruments to offset potential gains or losses due to currency movements. This allows investors to focus purely on the performance of the underlying Japanese stocks. Question 2. What is the DXJ ETF's primary investment objective? The DXJ ETF's primary investment objective is to provide investors with exposure to the performance of the Japanese stock market, while minimizing the impact of currency fluctuations between the Japanese yen, JPY, and the US dollar, USD. Here's a breakdown of this objective. Exposure to Japanese stocks. The core functionality of DXJ lies in offering investment in a basket of Japanese companies. This grants you a stake in the overall performance of the Japanese stock market. Hedging out currency risk. What differentiates DXJ is its currency hedge. This strategy aims to neutralize the effects of exchange rate movements between the JPY and USD. Essentially, the fund employs financial instruments to offset potential gains or losses arising purely from currency fluctuations. This allows investors to focus on the true performance of the underlying Japanese stocks. By mitigating currency risk, DXJ seeks to achieve the following. Reduced volatility. Currency fluctuations are a major source of volatility for international investments. Hedging aims to lessen this volatility, resulting in a potentially smoother investment experience for DXJ holders. Imagine the Japanese stock market rises by 10%, but the yen weakens against the dollar by 5%. An unhedged Japanese stock investment might see a return of only 5% due to the currency depreciation. Hedging in DXJ strives to eliminate this dampening effect and deliver a return closer to the actual 10% stock market gain. Focus on stock performance. With currency fluctuations minimized, the primary driver of your investment return becomes the performance of the Japanese companies within the DXJ basket. You can concentrate on whether these companies are thriving or struggling, making informed decisions based on their stock market performance. Question 3. Does the DXJ ETF track a specific index? Yes, the DXJ ETF tracks a specific index called the Wisdom Tree Japan Hedged Equity Index. Here's a detailed explanation. DXJ and its tracked index. DXJ isn't passively managed like some ETFs that simply mirror a particular index. However, it does have a benchmark it strives to follow, the Wisdom Tree Japan Hedged Equity Index. This index serves as the blueprint for DXJ's holdings and performance. The fund aims to replicate the composition and returns of the index, after accounting for its management fees. What's in the index? The WisdomTree Japan Hedged Equity Index focuses on Japanese equities, similar to DXJ. It likely includes a basket of companies listed on Japanese stock exchanges. The specific selection criteria and weighting methodology for the index are likely defined by WisdomTree, the fund issuer. Hedging mechanism within the index. A crucial aspect of the index, and consequently DXJ, is the integration of currency hedging. The index itself might employ various financial instruments like forward contracts or futures contracts to mitigate the impact of currency fluctuations between the JPY and USD. Benefits of tracking a hedged index. Standardized performance benchmark. Having a benchmark index allows for clear performance measurement. Investors can compare DXJ's returns to the WisdomTree Japan Hedged Equity Index to gauge the effectiveness of the ETF's management. Transparency. The index composition and weighting methodology are typically publicly available, providing investors with transparency into the types of Japanese companies DXJ is indirectly invested in. Question 4. What is the underlying asset class of the DXJ ETF? The underlying asset class of the DXJ ETF is equity, specifically focusing on Japanese equities. Here's a breakdown. Equity as the core asset class. At its heart, DXJ invests in a basket of companies listed on Japanese stock exchanges. These companies represent ownership stakes in real businesses, making equity the fundamental asset class of DXJ. Focus on Japan. DXJ specifically targets Japanese companies, providing exposure to the performance of the Japanese stock market. This focus differentiates it from broader equity ETFs that might hold companies from various countries. Hedging, a layer on top of equity. While equity is the core, the currency hedging strategy employed by DXJ adds another layer. This hedging aims to minimize the impact of fluctuations between the Japanese yen, JPY, and the US dollar, USD. It's important to understand that hedging itself isn't an asset class. It's a financial strategy that DXJ uses to manage currency risk associated with its underlying equity holdings. Why equity matters for investors. Understanding the underlying asset class is crucial for investors. Equity investments generally carry higher risks and potentially higher returns compared to other asset classes like bonds or cash equivalents. By knowing DXJ is an equity ETF, investors can make informed decisions about their risk tolerance and portfolio diversification. Question 5. What are the key risks associated with the DXJ ETF's investment strategy? While DXJ offers a specific approach to the Japanese stock market, its investment strategy comes with inherent risks to consider. 1. Equity market risk. As a core holding, DXJ is exposed to the general risks associated with the equity market. This includes potential for stock price fluctuations. The value of the underlying Japanese companies in DXJ can fluctuate based on various factors like company performance, industry trends, and overall market sentiment. These fluctuations can lead to losses on your investment. Market downturns. Broad market downturns can significantly impact the value of DXJ, even if the Japanese companies themselves experience smaller declines. 2. Tracking error. Although DXJ tracks the WisdomTree Japan Hedged Equity Index, there might be discrepancies between the ETF's performance and the index's return. These deviations, known as tracking error, can arise due to management fees. DXJ charges a TER to cover operational and management expenses. These fees can slightly eat into the returns compared to the unhedged index. Tracking differences. Perfectly replicating the index's performance can be challenging. Factors like transaction costs and the need for daily liquidity management can lead to minor deviations in DXJ's returns compared to the index. 3. Hedging imperfections. The currency hedging strategy in DXJ aims to minimize the impact of exchange rate fluctuations. However, it might not be perfect, especially during periods of high market volatility. When currency markets experience significant swings, hedging instruments might not fully offset the impact on the ETF's value. Unexpected currency movements. Unforeseen economic events or policy changes can lead to sudden currency movements that the hedging strategy might not fully anticipate. 4. Limited diversification. Compared to broader ETFs that encompass equities from various countries and sectors, DXJ focuses solely on Japanese equities. This concentration can expose your portfolio to Japan-specific risks. Economic or political events in Japan can significantly impact the entire DXJ portfolio if the underlying companies are heavily concentrated in specific sectors or industries. Lower diversification benefits. Diversification across different asset classes and markets helps mitigate risk. By focusing solely on Japanese equities, DXJ offers less diversification compared to a broader investment strategy. 5. Potential for lower returns. The hedging strategy itself can introduce some costs. These costs, reflected in the TER, can potentially reduce the overall return of DXJ compared to an unhedged Japanese equity ETF. Question 6. Are there other ETFs with similar objectives of DXJ ETF, but lower expense ratios? Yes, there are several ETFs with similar objectives to DXJ, exposure to the Japanese stock market with currency hedging, but potentially lower expense ratios, TER. Here's a breakdown to help you compare. DXJ ETF tracks the WisdomTree Japan Hedged Equity Index. Focuses on Japanese equities with currency hedging between JPY and USD. TER 0, 48% as of March 28, 2024. Potential alternatives with lower TERs. iShares MSCI Japan UCITS ETF USD, DIST, hedged. This ETF tracks the MSCI Japan Index, hedged to USD, and offers exposure to a broad range of Japanese large and mid-cap companies. Its TER is currently around 0.35%. Stracker's MSCI Japan Hedged UCITS ETF 1C, USD. Similar to the iShares option, this ETF tracks the MSCI Japan Index, hedged to USD. Its TER is currently around 0.30%. Schwab US Dividend Equity ETF, hedged. This ETF offers a slightly different approach. It tracks a hedged index of U.S. dividend-paying companies, but it may include some Japanese companies within its holdings. Its TER is currently around 0.8%. Question 7. Could a combination of individual stocks or other ETFs achieve a similar outcome with potentially lower costs or greater control? Yes, achieving a similar outcome to the DXJ ETF with potentially lower costs or greater control is possible through a combination of individual stocks or other ETFs. Here's a breakdown of the pros and cons of each approach. DXJ ETF. Convenience. DXJ offers a one-stop solution for exposure to the Japanese stock market with currency hedging. Diversification. Provides some level of diversification within the Japanese market. Lower costs than individual stock picking, typically cheaper than buying individual Japanese stocks due to economies of scale and potentially lower trading fees. Limited control. You don't have control over the specific companies held within the ETF. Higher expense ratio. The TER of DXJ eats into your potential returns. Individual stocks. Greater control. You can choose the exact Japanese companies you want to invest in, allowing for a more targeted approach based on your research and investment goals. Potentially lower costs. If you are a savvy investor and can minimize trading commissions, you might achieve a lower overall cost compared to the TER of DXJ. Higher risk. Picking individual stocks inherently carries more risk than a diversified ETF. Requires research and time commitment. You need to thoroughly research individual companies, analyze their financials, and stay updated on market trends. Alternative ETFs. Broader diversification. Consider ETFs that track broader indices of Japanese companies, including large, mid, and small-cap stocks. This can offer increased diversification within the Japanese market. Potentially lower costs. Some alternative ETFs might have lower TERs than DXJ. Less control. You still relinquish some control over specific holdings compared to individual stock picking. May not offer hedging. Not all ETFs focused on Japan offer currency hedging. Ensure the chosen ETF aligns with your currency risk tolerance. Question 8. What are the pros and cons of this DXJ ETF compared to similar options? Here's a breakdown of the pros and cons of DXJ ETF compared to similar options like currency hedged ETFs investing in the Japanese stock market. DXJ ETF. Pros. Tracks a specific index, provides transparency through its benchmark, the Wisdom Tree Japan Hedged Equity Index. You can see the index methodology and holdings to understand the ETF's composition. Established track record. Having been around for a while, DXJ offers a history of performance you can analyze before investing. Name recognition. Due to its issuer, Wisdom Tree, DXJ might have greater name recognition compared to some lesser-known alternatives. This can translate to higher liquidity and tighter bid-ask spreads. Cons. Higher expense ratio, TER, compared to some competing currency-hedged Japanese ETFs. DXJ's TER of 0.48%, as of March 28, 2024, might be on the higher end. These seemingly small expense ratio differences can accumulate over time and eat into your returns. Limited underlying index focus. Tracks an index focused on a specific slice of the Japanese market, potentially missing out on opportunities in small cap or other segments not included in the index. Less control over holdings. You don't have a say in the specific companies held within the ETF. The index dictates the composition, and you're invested in the entire basket. Similar currency hedged Japan ETFs. Pros. Potentially lower TERs. Several alternatives offer comparable exposure to the Japanese market with currency hedging but at lower expense ratios. This can translate to potentially higher returns over time. Broader index coverage. Some ETFs track broader Japanese stock market indices, encompassing large, mid, and even small-cap companies. This can provide increased diversification within the Japanese market. Potential for strategic tilts. Certain alternative ETFs might have a strategic tilt towards specific factors like value or quality within the Japanese market, catering to your investment preferences. Cons. Less established track record. Newer ETFs might have a shorter performance history, making it difficult to gauge their long-term viability. Lower name recognition. Compared to DXJ, some alternatives might have lower name recognition, potentially leading to lower liquidity and wider bid-ask spreads. Less transparency. Depending on the issuer, some ETFs might not provide as much transparency regarding their underlying index methodology or holdings. Question 9. What are the potential benefits and drawbacks of investing in DXJ ETF compared to individual stocks within the same sector? Here's a breakdown of the potential benefits and drawbacks of investing in DXJ ETF compared to individual stocks within the same sector, the Japanese stock market. DXJ ETF. Benefits. Diversification. DXJ provides instant diversification across multiple Japanese companies within a specific sector, depending on the underlying index it tracks. This spreads your risk and reduces the impact of a single company's performance on your overall investment. Convenience. Investing in DXJ is a one-stop shop for gaining exposure to the Japanese sector. You don't need to research and pick individual stocks, saving you time and effort. Lower costs. Compared to buying individual stocks, the expense ratio of DXJ might be lower, especially if you factor in potential trading commissions associated with frequent stock purchases. Professional management. The underlying index of DXJ is passively managed by investment professionals who track and rebalance the holdings based on the index methodology. Drawbacks. Limited control. You don't have any control over the specific companies held within the ETF. The index dictates the composition, and you're invested in the entire basket, even if you're not bullish on all the holdings. Average performance. DXJ's performance is tied to the average performance of the underlying index. You can't outperform the market if individual stocks within the sector experience exceptional growth. Hidden costs. The expense ratio of the ETF represents a management fee that eats into your returns. While potentially lower than individual stock picking costs, it's still a consideration. Investing in individual stocks. Benefits. Higher potential returns. By picking the right individual stocks, you have the potential to outperform the market and generate higher returns compared to an ETF that tracks an average. Greater control. You have complete control over your investment decisions. You can choose companies based on your research, risk tolerance, and investment goals. Focus on specific opportunities. You can target specific companies within the Japanese sector that you believe have high growth potential. Drawbacks. Higher risk. Investing in individual stocks carries more risk compared to a diversified ETF. A single company's performance can significantly impact your overall investment. Time commitment. Successfully picking individual stocks requires in-depth research of the companies, their financials, and the overall Japanese market. This can be a significant time commitment. Higher costs. Trading individual stocks often incurs transaction fees or commissions, which can add up over time, especially with frequent trading. Emotional investing. Making investment decisions based on emotions rather than thorough research can lead to poor choices and potential losses. So, is the DXJ ETF right for you? Well, it depends. If you crave convenience and want exposure to the Japanese market with a built-in currency hedge, DXJ could be a solid option. However, remember, there are always trade-offs. The expense ratio can eat into your returns, and you give up some control over the specific companies you're invested in. Don't forget, there are alternative ETFs and even individual stock picking to consider. The key is to understand your risk tolerance and investment goals before diving in. For more ETF breakdowns, industry deep dives, and maybe even some wild card picks, hit that subscribe button and smash the notification bell. We'll see you on the next episode of Chat ETF.